the SP 500 and the Nasdaq 100. The Nasdaq came crashing down this morning off of CPI data back into the 18K support. But surprise, surprise, support holds once again. Even though you have every cause to drop, to see sellers step into place, nothing happens once again. This is the most telling sign, in my opinion, for the downside, is that volume just doesn't kick in. As we look at what's happening with core CPI and headline CPI, both rising over the top. But we will attack what's actually happening there, because I don't believe this tells you the entire story, and everyone's saying that rate cuts aren't coming. But I think you have to be looking at the big picture with what's actually happening here, because when we look at what's actually taking place, I posted this on Twitter, the link is down below. The main things that are rising, it's not food. Food is coming down. As you can see up here, it is coming down. Food away from home did rise, but that's more businesses. That's not how much it costs food at home, obviously groceries, etc. That price is still a little bit elevated for away from home, restaurants, etc. Energy costs are up. Worth mentioning, energy. Do high rates impact energy? Major question, right? Gas bills, electricity, those are up. Is that affected heavily by high rates, right? Transportation still elevated, and medical care services. Now, our used cars, shelter is honestly not doing anything. It's actually lower than it was back in December and September, which we know when rates get cut, shelter will also drop once again. Cars, vehicles dropping, continuing to drop. Right, apparel's a little high, I guess. Maybe clothes, or maybe someone buying clothes. Yeah, that's it, guys. The people buying clothes. That's what's inflating this economy. Yeah. So those are things that you have to be looking at. Big picture, what's taking place there. And does this mean that we have to put a pause on cutting rates sooner than later? That's the major point here. Now, again, as you can see, the market didn't like it at open, and then buyers stepped right back in. As you look at the S&P, we go look at SPY, what's happening here. You came back down to previous lows we had back from the 4th. You bounce right off of those so far. Now, I will say the ES isn't signs just yet of a bounce. I don't think this is confirmation that we are in the clear, that we're just straight bullish. Now, what I will say, and I did say yesterday, is if you get any amount of bullish information, I believe the market is ready to explode. Number one. Okay, that's number one. Part of the video is sponsored by our friends over at Moomoo, just to let you know. And again, this is the trading platform that I use for myself, so I just got to give them a special shout out. I really appreciate everything they're doing for the channel. We will be at the New York Stock Exchange at the end of this month in New York to let you know, going over the Nasdaq, things along those lines as well. So really happy with the stuff that's going to be coming here. But again, when it comes to options, everything I'm doing there, this is my favorite platform, and these are the guys that I'm using going forward. Expect a lot of new information and new stuff here on the channel from these our partners over here at Moomoo. Just to let you know, let's get back to the video. I think today was evidence of it. Even with some of the worst data you could have had on CPI, statistically, just number-wise, not what we just went over, you didn't fall. You didn't lose anything. Like, we look at volume here, 78 million. Granted, as you go to Edgeful and look at that data, like, you're kind of back on track of getting some higher volume, normal volume on a Wednesday, but is it really, like, did you get a direction? Did you actually? That's the question we have to ask ourselves. Like, are we actually getting follow through? And that's where I'm kind of stuck at right now. Now, again, I agree. If we break 5-weight on SPY, it's pretty bearish. If Qs break below our support at 432.6, you're bearish. Like, those are things that we have to be paying attention to. But until that happens, I can't get on the side of the fence where I'm going short, right? Doesn't make logical sense for me. So again, those are things I'm looking at. But what I will say, when we go to the data, when we look at what's happening here on the dashboard, when we look at what's happening on price action, more of the same, right? Sporadic movement overall, green and red days. We know Wednesdays and Tuesdays are our worst day of the week typically. Thursdays are the reversal days. So maybe we get a reversal tomorrow. But again, even to get bullish on the market, I have to clarify, I won't get necessarily quote unquote bullish to breaking out into highs as we get back above 18.6. We've literally rejected there countless times. Bare minimum, break back above 18.47, make a higher high on the 4-hour, 2-hour time frame. Until that happens, I'm very, very cautious. Okay. Now, you go through tech, you go through everything else, and I think everything's just moving sideways. Now, what I will say, the scary part here is when we look at something like the dollar, and the dollar is moving straight up and making new local highs here on the year. That is concerning. Okay. This is a risk off metric if I've ever seen one. You look at what's happening with the 30-year yield. another, local high on the year, another risk off metric. Things you do concern me. I will say this is a concerning part. But there is a disconnect when we look at this. We go back to last year when yields in the dollar rose, we saw the market pull back. So far in this year, the market is almost in disbelief of this information. It's to the point of, is the data really worth looking at this point? Which sounds crazy. But again, as you go back to that CPI data, the metrics here that they continue to talk about are not the ones that are hurt. Like, shelter has done nothing. It has done literally nothing over the past 6-7 months. It's done nothing. Medical care services, it's like a seesaw back and forth. Transportation, plane rides, buses, like, come on, Ubers. What are we talking about, right? And then everyone's complaining about the grocery bill, but I'm just saying, you look at the data. Don't get mad at me. I'm just pointing out the data in front of us. Okay, please. Do not get mad at me. I'm not against you. I promise. I'm not. But when I look at this data, it's not that bad, right? It's not. Things you got to consider. Call me biased, call me whatever it is. But the things that are rising are electricity, gas, utility gas, right? Some of your commodities, and primarily medical care commodities, and then medical care services and transportation. Wild. Right? Wild. So again, my viewpoint there. I have a pretty big assumption that when Powell and them come back out and talk about this, it's going to be more of the same. We're on track. It's not concerning. That's been the story. Okay. So let's jump into equities and what we're looking at there. If you have questions, comment down below what I just covered. Now, go into NVIDIA. Again, on NVIDIA, I continue to say this. It's shocking that we did not dip down to 824 today. Very shocking. I went over what Jamie Dimon said yesterday about AI and what's happening there. He called AI the next industrial revolution, right? Crazy. And NVIDIA liked that information. Good balance here on the day. NVIDIA to get bullish, you're back above 924. That's where you get bullish. Until then, you got to be careful. Bare minimum, get back above 896, 897. Until then, I'm not a huge fan, not going crazy. Netflix, again, you're going to notice a common theme here is, you're down a little bit on the day, past 2 days, but you're consolidating at highs on your primary tech names, even though Nasdaq's down about 500-600 points from highs. Worth mentioning. Netflix still chilling above 615, so it's still bullish. Pretty bizarre. Microsoft, again, you want to go long when you get back above 427.8, but you haven't been able to get back above that level. Until then, you came down to our level we mentioned from yesterday, 420.8, and you're bouncing off that level as well. But again, what's Microsoft doing? It's consolidating at highs. Like, what are we talking about, ladies and gentlemen? What are we really talking about here? As I go through most of these names, it's the same theme. AMD bouncing off the level we mentioned yesterday, 164.5. Bouncing, looks decent so far. But again, to get bullish on AMD, you got to get back above 185, bare minimum 174.7. But over 185, I think it's like an easy long immediately. So yeah. Amazon's been one of the strongest names overall in the market. One of the best ascending triangles broke out into 187. Looks like it wants to get continuation, to be honest. Even with the market pullback, again, are you seeing the theme that most of our tech names, most of our top Mag 7 names are still at highs? Isn't it bizarre? It really is. We're bearish. Remember, we keep them in the back. We're guys. We got to be bearish, right? Google still chilling at highs so far. And I'm not telling anyone to go to YOLO. I'm not saying to hammer buys, but I am saying practice caution when you're looking at going short here, because going short here has got to be one of the silliest ideas, right? Why would I want to guess when the top is going to be? You know what I mean? Why would I want to guess that? What has it worked over the past year? To me, it hasn't. Clear as day, it has not worked for the past year. So why do I want to start now? My last two names, Robinhood. Again, I still love Robinhood. Again, you get back above 19.5. I think you're bullish as hell. Room to $25, $30. Target consolidating at highs, sitting at 171.5. Looks great. Back above the 200 SMA. I think you're pushing towards 200. But again, guys, the video doesn't need to be long today, right? Again, you have PPI in the morning. I will be paying attention to that. But overall, I don't see anything from the data that tells me a crash is here or we can't cut rates. There's a reason the Fed keeps saying 3 cuts are still on the board. That's still the base case, right? Again, the base case for the Fed has played out 9 out of 10 times over the past 2.5 3 years right now. I'm just going to let you know that right now. That's my opinion. Questions, comment down below. See you guys tomorrow. Have a good one.